Hey there, my name is Karen Jones, Content Editor for the Society of Technical Analysts. Today we're looking at the gold market, and as you can see over the past couple of weeks, we've rallied higher quite sharply, and we're now back into the middle of what looks to be a huge long-term range. Now currently we have got resistance here at 1932, coming in from these old lows back from earlier in the year. The market is consolidating quite tightly in a range, and we notice the buy signal on the DMI index. So why are we looking at this today? Well, I actually think from a longer-term perspective, it's becoming quite interesting, because although this looks like it's just in a range, if you actually look at the longer-term charts, the weekly chart, for example, you can see that the market has bounced very smartly off its 200-week moving average. Now this comes in at 1817, and it also held the previous low that we got in February. So what does that tell us? It tells us that the market is in fact showing bullish signs from a longer term perspective. Now when we look at the monthly chart, we can see that it is still very well underpinned by the 55-month moving average, and the risks remain that we test the top of the channel, which goes all the way back to 2011. Now, recent highs coming around 2070, but the top of this channel is nearer to 2100, and I suspect that's where this market will ultimately go. Let's have a look at the nearer term levels for this market. So we've got 1953, the high we got in September, but the real big levels are going to be these 1987.50 and 1983 highs that we saw in July and June. So that is going to act as your barrier for the top of the range here, nearer to 2070 and 2100. But keep an eye on gold, because once you start to clear this kind of area here, I think it's going to start to really pick up momentum on the top side. Thanks very much.